Howdy there, folks. Welcome into today's video. I got some very, very important things to share with you in today's video. We got to talk about countless stocks, okay, including Palantir. We got to talk about Tesla. We got to talk about my beliefs on those stocks and kind of what's going on there. That I think is very important. Some things to show you. We're going to talk about obviously the markets in general. Now we're going to start here at the front of the video and many other various things. It's going to be a busy video. I appreciate all you that are subscribed to the channel as always, and a lot to get into. It's going to be a busy week this week. By the way, just so you guys know, we just put the email list together. So if you want to get the basically the Black Friday deal we do every single year for joining the private stock group, if you want access to that when it drops on Black Friday, check out the pinned comment down there. It'll also be linked in the description, and we'll send you over the deal when that drops. Okay. First thing I want to show you here. This is extremely important that everybody's educated on this. Okay. What we're looking at, if you didn't know, midterms are tomorrow. Okay. Now, if we go ahead and we look at the S&P 500 performance 6 months after the election and 12 months after the election, what we're going to find is since the 60s, we've never had one time, not one time ever, where the market, the S&P 500 was down 6 months later and 12 months later. Now, could this be the first time ever? There's always a first for everything, right? There's always that first time maybe breaks trend. But I think it's very important that every single participant in the market understands that this has never happened before, okay? So what this likely tells you is the market will be higher and significantly higher in 6 months from now, 12 months from now than it is actually today. And what you're actually going to find is even on a 3-month performance, most of the time, even 3 months after the election, you're actually up quite significantly. It's not a perfect track record like the 6 and 12 months is, but it's pretty darn close. I mean, when you see the performance 3 months even after the election, okay, folks? So I think this is very important for everybody to understand. It doesn't mean let's go all in the market and let's go all in short-term call options or something like that. But, you know, I think this is, and think about this for a moment. I think this is very important for everybody to understand, okay? We're about to go into a time period when most folks look at it as a Santa Claus rally, okay? That's what usually always happens, and as you get into mid-November all the way through about the end of December, it's called the Santa Claus rally. So we got that going on. We got a lot of obviously pessimism in the market, right? We've got a lot of just insane levels of negativity around inflation and how it's sticky and it's not leaving us, and how the Fed's just going to continue to raise rates at, an insane clip and things like that. So, I do look at the market, and although there's definitely a million things to be worried about, when you do look at that market, it's not out of the realm of possibility to imagine the market's higher in 6 months from now and 12 months from now than it is today, even with the gauntlet of negative stuff, because we have priced in a lot in this market already. And so I just think this is something very important for everybody to kind of keep in mind here. It's never happened. It doesn't mean it can't. It certainly could, but that's the situation we have going on, okay? Now, you look at a stock like Meta stock here today, right? And this stock's up 6+%. And it wasn't like the market went crazy up today or something like that. So you see the stock up 6+%. And what happened was Meta didn't really announce it. It's kind of got leaked that Meta's likely going to lay off thousands of employees over the next week or two, okay? Thousands. Now, you might say, okay, if a company's laying off a bunch of employees, that's bad news. Shouldn't the stock go down? Well, in many cases it usually would, but not in Meta's case. Meta, every single Wall Street participant and investor believes Meta is way overspending on employees right now. And so basically everybody's applauding this move. If Meta even came out and announced they're going to cut 10,000 jobs, 15,000 jobs, even 20,000 jobs, the stock would likely go up 25% in a snap of a fingers, because almost everybody's convinced this company's massively overstaffed. They're spending way too much on employees. There's probably way too many duplicate roles in that company, and they need to cut down in a major, major way, because they almost doubled their workforce over the past 2.5 years. Literally over the past 2.5 years, Meta's basically doubled their workforce. And people are looking at it and they're like, why did we need to double our workforce? Meta didn't double the amount of users on the platform. They didn't, that didn't happen. So there should be no reason why the employee force doubled. Now, obviously they're spending aggressively on the metaverse and they believe that's a massive opportunity. And so that's great. But does that mean you need to double your workforce? Probably not. They're probably way overstaffed, and they're probably going to obviously cut some jobs, and it might not be the last time they cut jobs. They might cut some more jobs in a few months from now, right? And when you got a stock that's obviously down, like Meta's down over the past year, There's going to be some moves that are made there. That's just the bottom line, and they definitely need to, cut. And the thing is, even with cutting, they're still going to be able to spend incredible amounts of money on the metaverse and still execute on that opportunity. They're just likely spending too much, and that's why that stock's up big here today, okay? Corsair, you look at this stock, right? And I got enough Corsair shares coming out of my ears, okay? I got so many shares of this stock, it's ridiculous. But when it comes to Corsair, you look at this stock and you say, 32% in 2 trading days? 32% up in 2 trading days. And you look at this one, you say, how is this stock up 32% in trading days, in 2 trading days? I'll tell you exactly how the stock's up 30+% in 2 trading days. The reason the stock's up 30+% in 2 trading days, it was a beaten down dog stock, and they came in and they didn't report a disastrous earnings. That's all it takes in this market. When you were talking about you are with beaten down dog stocks like a Corsair, all you need to come in with is things are decent and incredible excitement. Activision Blizzard just came out and reported actually very impressive numbers after the bell. And I haven't got to see their guidance yet, but I bet you will be probably pretty good. And so I believe gaming is actually going to be in a great spot for the next year or two. And I believe Corsair is going to benefit from that. And when you're coming off of everybody being insane bearish to all of a sudden, things actually might be pretty decent for this business model, and they've cleared out almost all their inventory. The only place they still have some inventory challenges is in Europe, based upon what I listened to in their conference call. And so they're going to go into 2023 in a great inventory spot in terms of like channels and not having to discount a bunch of products and stuff with, in my opinion, likely a very healthy gaming market. And what happens? The stock goes up 30+% in a matter of a couple trading days. I wouldn't be surprised if Corsair has an absolutely amazing 2023 in regards to its stock price and in regards to its business performance in 2023. Don't be surprised if they report very nice growth and margins that expand quarter after quarter after quarter after quarter in 2023. Do not be surprised at all. You look at a stock like Elf, and it's like, how does this stock just keep going up? It's like Elf goes up and up and up. It's up another 3% today. It just goes up and it goes up and it goes up, right? And folks look at this and they're like, how? How does this stock just keep going up and up and up? It seems like just easy money, right? Now, I will say, on the downside, I always got to look at the positive and negative. The company is trading a bit rich. It's trading at about a 44 forward P on the stock right now, which is not necessarily cheap. But when you've got a company that's increasing their profitability in a massive way, that excites people, right? And, on the flip side, you look at this company and look at the shelf space increase they've had, right? And Payday, shout out to you. I don't know why our Elf, I think, let me address that first. Why is the Elf chat not, popping? Like many of the other chats inside the private stock group, inside the Discord chat. The problem is most individual stock market investors, including most people that watch my channel, most members in the private stock group, everything like that, men. Shout out to the 10 or 15% of the people that watch my channel that are females. I love you guys. I appreciate you in a massive way, okay? But the fact is 85 to 90% of the people that watch my channel are men. And most are men in their, 30s, 40s, 50s. So the fact is, most men don't even consider companies like an Elf because it's like a makeup company, it's cosmetics products. They're like, it's not relevant to me, so I can't look into it. And I'm like, that's one of the biggest mistakes you can ever make in the stock market is not at least looking into these things and seeing what's going on there and understanding the industry. You got to understand, if you spend 3 or 4 hours looking into a company, you can find out so many details about that company. It's incredible, especially in today's internet age. You can find out where their revenues come from, their product expansion, things like that. And it's very sad that I see men miss out on some of these amazing opportunities in the market because it's a female-related company that mostly sells to females. And I don't know. And it's like, dude, do a little research on this. And believe me, there's incredible opportunities in some of these sorts of companies, right? And so, when it comes to Elf, they've been getting massive market share from several different retailers out there and just continuing to build their brand in a massive, massive way. And I mean, when I first started buying into Elf, this was back in either it was late 2018 or beginning of 2019. When I first started buying into that company, I went into a Target store back then and they had maybe 3 feet of retail space. And you go into some of these Target stores now and you see Elf has 9, 12 feet of retail space now. They're becoming a big brand. They're becoming a real player in these markets. And people need to absolutely, consider stocks like this. And that's why there's a lot of excitement, right? And my next ELF stock is Honest. This will be a $30+ stock, and it's $3 here today. It's written all over the wall on this one. It's completely forgotten about. They sell diapers, they sell wipes, they sell beauty products, cosmetics products, and this is my next ELF, and this will be a stock that gives me ridiculous gains. But I'm going to make way more as a percent on this one, and I'm going to make way more money on this one because I've invested much more aggressively. And the thing I'm going to make sure I don't do with Honest, like I did with ELF, is I'm going to make sure I don't run and take profits too soon on that one like I did ELF. I took way too many profits way too soon on that one. And so, a lot of guys aren't even going to consider this one. They're like, diapers, baby wipes, cosmetics products, soap, shampoos. Most of their high majority of their customer base, females that buy their products. I don't know about this, and it's like, do a little research. Revolve's another great example of a company that sells mostly to females, and a lot of men don't even consider a stock like this, and it's one that gives you great gains in the management teams on a very high level. And I wouldn't be surprised if Revolve's a stock that goes up massively over the next 3 years. Okay, and I will put it to folks like this to illustrate this point. Apple's a stock that's given great returns the last decade. We all know that, right? But there's a lot of people that refuse to buy Apple stock or take that stock serious because they might have not been Apple fans, or they might have liked Android products or something like that. And you have to understand, not everybody's you. Not everybody's you. Just because you love or hate a product does not mean everybody else in the world loves or hates that product or service, okay? That's just not the way it works. And so it's kind of frustrating to see that happen, where people miss out on these opportunities because they're a certain gender, or because they I don't use that particular product, so then it's irrelevant. And it's like, do you know how many people there are in this world? Do you know how many people in different demographics there are, and different income levels, and this and that? Just because it's not relevant to you doesn't mean it's not relevant to everybody else in the world, right? Personally, I don't drink. Doesn't mean, alcohol is not relevant to massive amounts of other people in this world, right? I don't drink energy drinks, but it didn't prevent me from buying Monster Energy stock back in the day when it was Hansen's Natural Beverage, because I understand tons of people love this product, and they're going to continue to buy it. Okay, so that's just a bottom line there, that you got to consider some of these companies. And it's unfortunate, I'm watching the same exact thing play out with Meta stock right now. A lot of people are not taking this stock serious, and I think this is one of the easiest risk rewards in the world in terms of stock market. And a lot of people aren't considering it because they're like, I don't use Facebook, I don't use Instagram, I don't use WhatsApp, I'm not in the metaverse, so it's irrelevant to me. And it's like, okay, you're the one half of the world that doesn't use their products, but you realize the other half of the world does. They have 3 billion plus people that use their products, okay? And so, just because you're in that half doesn't mean you can't at least look into it and kind of see some things here, okay? You have to consider these things. And if you don't, you're just going to likely miss out on a lot of money, on a lot of money over time, okay? So that's just something important. I started buying Tesla stock before I even owned a Tesla. Think about that for a moment, okay? You got to consider these things, okay? So Palantir, stock down big, 11% here today. Now, I will say this about Palantir, okay? We're going to go over their numbers in just a moment. If you're a long-term Palantir bull, this is the best thing that could have ever happened, the stock going down 11% here today, because basically you have at least 3 months in front of you where this stock should be under $10 a share, and you're going to be able to pick up shares for dirt cheap. I consider dirt cheap for Palantir under $10 a share. And so you're going to have likely at least 3 months of runway to get shares under $10, maybe potentially 6 months, 9 months, but that's a potential, okay? That's assuming the market stays weak or something like that. If we go on a bull run, I wouldn't be surprised if Palantir goes back well over $10 and, maybe 12, 14, something like that. But you have at least, in my opinion, 3 months of runway here. Somebody like myself that wants to build out a much bigger position in Palantir, because I've got a kind of a baby starter position of maybe like $30,000 in the stock, I would love to double and triple my position over the next 3 months, and I will likely do that when it comes to Palantir. I actually hope this one continues to go down. I wouldn't mind if it goes to the 6s or something like that, right? So in terms of Palantir, when you look at this one, the company said Monday it's targeting around $503 million to $505 million of revenue in the fourth quarter. Analysts were expecting 506, so it's like, okay, That's like the smallest miss in the history of the world. Okay, if you're going to count that a miss, I guess we can count that a miss, but that's a joke. I mean, Palantir's at a midpoint of 504 mil. Analysts are 506.8 mil. So it's a miss of maybe $2 million or $3 million. That's like nothing on a company that's doing $500 million plus of revenue a quarter, right? And doing 500 mil plus a quarter, that puts them obviously on a run rate of, well over $2 billion a year in revenue now at this point in time. Palantir's revenue target, that also suggests the company will record the slowest pace of revenue growth since it went public. Still, the company reaffirmed its full-year outlook of $1.9 billion to $1.902 billion in revenue, which includes an estimate of $6 million hit from currency. Now, I think this is important in regards to Palantir. They're still growing at a very nice clip, despite a very challenging environment, right? Remember the product Palantir sells. I mean, many companies that sign up for this, it's multi-million-dollar contracts, and sometimes it's, 8-figure plus contracts. And in this environment, it's not the easiest environment to sell these sorts of big contracts to companies that are very concerned about what's the state of their companies, what's the state of the economy, what's the macroeconomic landscape going to be over the next 6-12 months. There's a lot of companies that are very confused. That's why companies aren't even giving guidance for the most part right now, a lot of these companies, because they're very confused on what the situation is, right? There's a lot of uncertainty out there. So Palantir's fighting a very big uphill battle, and they're still putting together very, very nice growth. EPS came in at 1 cent on an adjusted basis versus 2 cents was expected by analysts. Revenue of 478 mil for this past quarter versus 470 was expected. So 478 versus 4. So they beat by $8 million of revenue in this quarter. They don't get any credit for that? That seems a little silly. Palantir's revenue for the quarter increased 22% year over year. That's impressive. In this challenging macroeconomic landscape, it's impressive, man. And its U.S. commercial revenue grew 53%, important number there. The software company, which is known for work with the government, said its U.S. commercial customer count increased 124% year over year, growing from 59 customers to 132 customers. In a letter to shareholder, Palantir CEO Alex Karp said the company is in the early stages of significant transformation. Karp said that Palantir anticipates regional markets within the U.S., such as the Midwest, Southeast, Texas, New England, could develop into billion-dollar businesses. Maybe multi-billion, we'll see about that. He said billion-dollar businesses. However, Karp said that countries in continental Europe have been less willing to introduce a software system and challenging existing habits. And do keep in mind, Europe's in a worse situation than the United States is in general. So I think that has a big part to play in it. I don't think it's necessarily just like Europe isn't interested in Palantir products. I just think they're in a tougher macroeconomic landscape than the US is. They're facing everything on a more challenging front, right? Now, I want everybody to watch Palantir over the next 2 trading days, okay? Because basically, Wall Street has this 3-day rule. And I talked about this in a video last week, okay? And basically, it's if a stock goes down more than 10%, you can't buy the stock until basically it's after its 3rd day. So today was day 1. Palantir reported in the morning, stock goes down double digits. So hypothetically, Tuesday and Wednesday should go by, and on Thursday, you should be able to buy the stock cheaper than it's trading at today. That's if Wall Street's 3-day rule, let's call it, holds together. So this is going to be interesting to see how this plays out, and see if on Thursday, can you get shares on Thursday for cheaper than what Palantir is trading at today? I think that's going to be rather interesting, guys. I'm definitely going to keep an eye on that one. Tesla down 5+% here today. Big downward move with Tesla, under $200 a share, and man, it's in a tough place right now. I looked at a few things that I thought were interesting. One is Elon Musk has pulled more than 50 Tesla employees into his Twitter takeover, and I saw this and I thought to myself, why should Tesla have to have some of their best employees go over to Twitter to help with Twitter? That bothered me, and I wouldn't be surprised if this is starting to bother a lot of other big Tesla shareholders. And keep in mind, the biggest money in Tesla stock now at this point in time is big money, Wall Street money. And if you're a shareholder of Tesla, you look at this and you're like, because Elon's not going to pull 50 scrub employees from Tesla and put them over on Twitter. He's going to pull 50 of the highest quality employees from Tesla and say, I need you to go work on Twitter. And it's like, why do we have to lose 50 of our best employees over to Twitter? We don't care about Twitter. I don't care about Twitter. I want Tesla to succeed. That's where my money's at. And so it's a frustrating ordeal, and it just goes into these million different problems that have arisen from this Twitter deal with Elon Musk. And it's like, it's bad enough we've all had to deal with all this drama and crap, and there's going to be a lot more coming too. This isn't ending. There's going to be so much drama coming with Elon and Twitter over the next few years. You have no clue. And we have to lose 50 of our best employees over to Twitter. That's just ridiculous, man. It's absolutely ridiculous, but it's what's going on, and it's very frustrating. I think it's starting to rub a lot of folks that are, let's call it big investors, the wrong way, in this whole situation. You look at Tesla, it massively underperformed every other stock in the big tech category today. And think about this for a moment. Almost all these big tech companies, what have we seen, including Tesla? Layoffs, hiring freezes, things like that, right? And so we're in a situation now at this point in time where who's the main core customer base of Tesla over the years? It's these folks. It's big tech. This is the most core customer. And a lot of those folks are losing jobs right now, right? Meta just announced they're going to cut thousands and thousands of jobs. So we're in a weird environment right now where you're looking at this and you're like, oh man, Tesla's most loyal customer base is in a tough environment right now, right? And there's going to be more job losses there before it ends. And even myself, I look at Tesla, and obviously Elon always talks about 50% plus growth a year, somewhere around there. I'm looking at, 2023, analysts have them growing about 40%. I just don't see them hitting that number, unfortunately, in 2023. I don't see them hitting that number. As bad as I want them to hit that number, I'm looking at so many various factors, and I'm like, I just don't see it. If Tesla, here's my opinion, if Tesla grows 20% revenue in 2023, huge win, huge W for this company. Analysts haven't grown 40%. I'm like, I just don't see it, okay? With what's going on with interest rates, you got to understand, most people that buy a Tesla buy it on a loan, okay? As with most cars. But the problem is, if you're going to buy it on a loan, it's getting more expensive basically almost by the day. And the fact is now at this point in time, even if you have great credit, you're going to be paying much more expensive price to finance that $60,000, $70,000, $80,000 Tesla than you previously were. And it's not a small amount. It's a massive amount. It's a massive amount difference. And that makes it a tougher environment. I mean, if you buy a Model 3, a Model Y, something like that, even if you have great credit, your monthly payment's likely going to be over $1,000 at this point in time, if not touching $1,200 to $1,400 now, with how much interest rates are going up, even if you have great credit. And the thing is, it's likely that when it comes to getting auto loans, interest rates are going to get even higher. Okay. And so that makes the affordability even a worse situation, right? Now you tack on this, and, a friend of mine who is, as much of an expert in the auto industry as possible, he told me a few weeks ago, Carvana's going under. That's what he told me, okay? And not a company I obviously follow, but he's like, this baby, they're done. They're cooked. They're going under. And, look at the stock price over the past few days. Yeah, it does kind of look like that sort of situation, from $300+ to now it's at $7. And he believes it's going to zero, and zero sooner rather than later. And here's the deal. Carvana has like 100,000 plus vehicles. Like, it's a ridiculous amount. And so likely Carvana is going to go under. Potentially even others that try to compete in the Carvana space are going to go under as well. So what you're likely going to see in 2023 is a mass amount of autos, used autos specifically, hit the market at probably the worst time possible, because what we're going to likely see in 2023 is a massive pullback in just autos being bought in general, whether it's new or used autos. And that all is going to hit the market simultaneously, which is going to cause even a bigger mess for the auto market, because then people are going to be, if you are in the automobile market looking for a new vehicle at that point in time, you might look at it and be like, do I want to buy a brand new vehicle and spend, a really large amount of money? Or do I want to buy used cars because they're selling for pennies on the dollar? And that's going to be likely a situation that plays out there. And so that causes a bad dynamic in the auto market as well, right? It was funny, just while I was prepping this video, they put this up on Fast Money, and it was 2022 tech layoffs so far, right? Rivian, Stripe, Klarna, Coinbase, Netflix, Robinhood, Microsoft, Peloton, Snap, Twilio, PayPal, Shopify, Carvana, Lyft, Twitter, Tesla. And here's the thing, this best case scenario is that's all we get. But the likely probability is you're going to get more layoffs in probably 2023, including some of these companies are unfortunately going to go under. And when they go under, that's when you're going to see, workforces get cut by 30%, 50% in some of these situations, right? Some of these companies are great companies. You won't see that. But the scariest part is you've seen some of these companies lay off that are some of the creme de la creme companies, including even Tesla, right? Why would Elon Musk fire a bunch of staff at Tesla, right? And talk about, recession warnings, probably because he sees something there, right? So I think that's rather important. Now, I put out a video very, very early this morning on my new channel. Jeremy Lefebvre Makes Money is my reaction channel. The Fed doesn't want you to know this. You have to watch that video. It's a must watch, okay? If you haven't seen it, watch it. If you have seen it, watch it again, okay? By the way, I appreciate everybody that's subscribed over there. 18,300 or 600 plus subscribers now at this point in time, but that is a must watch video. So make sure you guys check out that. Appreciate everybody for joining me. As always, it's going to be a busy week here. I'll keep you guys up to date with everything going on. Once again, if you're looking to get our Black Friday sale, that's going to be for the private stock group, private Discord chat, everything like that, our once a year deal, enter in your info and we'll send you over that deal when it drops on Black Friday. Much love as always and have a great day.